All right, that was an extensive discussion about what the markets are looking like, be it on rupee or even the themes for that matter that Feroz has discussed with us. But yes, the markets have quietly, they've smartly held on to the gains. Sensex up by about 300 points, Nifty also holding above that 23,790 mark. But it has slipped from the day's high levels from the opening highs, but still holding with about 120 points gain. The market breadth continues to improve, standing at about 2:1 advanced decline ratio. Majority of the sectoral indices are seeing a bit of a gains, barring your Nifty IT, which has slipped into the negative territory. But yes, let's talk about this particular sector. That's your Nifty IT. That is, in the past couple of sessions has benefited out of the weakening rupee. It has seen some bit of a rebound. But yes, to decode more about this, we have with us Sandip Agarwal, who is the fund manager of Sowilo Investment Managers. Sandeep, good morning. So good to have you with us. And of course, you've been waiting for a long time. But Sandeep, your first take on the IT sector, we did see a bit of a relief rally, but right now it's been quite sticky. So how long do you think the IT stocks can benefit out of a falling rupee?
Hey, hi, good morning, and thanks for having me on the show. So, I am not only, I have changed my stance in last 1 month after being bearish for 14, 15 months for three reasons. One, the IT stocks have corrected very, very meaningfully, 40, 50%. So that gives a lot of valuation comfort. Second, at least 15 to 20% benefit because of rupee depreciation will be there. And thirdly, what has happened in 15 months, the initial focus on the hardware cycle for AI has broadly been done. And now, the distribution cycle is going on, like where likes of, Gen AI and Grok and all of them, including Microsoft, Google, everyone is trying to sell the AI through their enterprise models and through the distribution network to the retail. So I think that cycle is right now doing well, and that is the reason the fan stocks, some of them which participate in that space, are doing phenomenally well. But the third thing which will happen is that when this application layer comes in, that is the place where the outsourcers will come in focus. So I think in next 3 to 6 months you will start seeing a lot of demand coming into the outsourcers. Now I am not saying that we are a high growth sector. We can't grow with the likes of the distribution AI distributors and the AI players likes of Anthropic or Google or any one of them. But definitely we will see a 5 to 7% growth. So this sector is a mature sector, but now after 2 years of pause, I think some growth will come back. So lower growth for 3 4 years is something which will happen, which was not the case earlier. So we will see a 6 7% industry level growth. Add to that, this substantial decline in the prices of the stock. So and then this 15 20% benefit of currency depreciation. So you are going to see a 60 70% jump in PAT in next 3 years. So if there is a jump of 60 70% in PAT in next 3 years, then broadly the stocks are trading at single digit PE if you take the forward number. So I think there is huge comfort, and I believe that color of money is same whether it is through currency or through growth, volume growth. I don't think people will differentiate between that for a longer period of time. And very good part is that most of the companies have cut cost in a very significant way, so there is no money to be burnt in any kind of cost initiatives. So I think slowly flavor will come back in this sector. I see very good upside at the index level, and we believe that a lot of these stocks will give phenomenal return in next few months to couple of years. As I said, PAT jump of 50 to 70% for stocks in next 3 years is minimum. And from that perspective, I expect at least 50 to 70%, even if multiples don't re-rate, 50 to 70% stock return will happen in next 3 years time. So that is the way I look at it.
Okay, all right, all right. 50 to 70% growth in PAT. That's quite an optimistic horizon right now, Sandeep. But I mean, what triggers do you think is going to be a tailwind for the IT sector, which has seen about low single-digit growth in the March quarter? What changes are you expecting from here on?
So as I said that after 2002, first time in 2024 onwards, the hardware cycle has picked up where demand for memories, demand for GPUs and all those things have come. So obviously hardware cycles are very very deep cyclical, and after 20 years the demand has come. So obviously when hardware demand replacement cycle comes or new hardware requirement comes in, it is very sharp and everyone has to spend immediately. You have to stop all your budgets and you have to allocate there. So that is what we have seen in last 2 years. Across the board, people are buying GPUs and everything associated related to the AI disruption. And that is the reason you are seeing AMD and Nvidia doing so well. Uh, how long they will continue to do well? Maybe 12 months, 18 months. But we are entering a phase where basic hardware requirement of all the companies is being met. Now it will be incremental. So you may see after some time, 2 years or 3 years, there is a sharp dip in the hardware growth also. Now, after that comes the distribution layer. That is, people who are buying those hardware, they will build software and the services around that, which is all your AI companies. And I think that that industry is going to do well for a longer period of time, maybe 8, 10 years. So you will see good growth there. And those companies then need people who can service and who can help them, building this capabilities. So the application layer will come into play in next 6 months, and that is where we have a big role to play. So again, I am not saying we are going to grow at 15, 20% at the industry level, but can we grow at 6, 7%? I think yes. And if we grow at 6, 7%, the large companies may grow at 8, 9%, and the mid-sized company can grow at 12, 13%, and the small size companies can grow at 16, 17%. You add to that this benefit of rupee, you will find that most of the stocks are around one, less than are around single digit PE. So you are giving multiple of utility companies where to IT space where there is a buyback support, there is good corporate governance, and they are positively impacted due to currency depreciation. So I think all these things will play out, and that's the reason I'm saying that you will see. And I'm talking fundamental. I'm not even saying multiple. I'm saying the PAT itself will jump by 50, 70% if you do the maths on Excel. And we always have to go by what Excel says and math says. So by mathematically, this company's profit PAT will go up by 50 to 70% in next 3 years. Now in next 3 years, if PAT goes up by 50 to 70%, even if you keep the multiple same, I think that is the minimum return which should happen in the stocks.
Okay, got it, got it. Then Sandeep, how much of the recent correction in the IT stocks is already pricing in the AI disruption? And going ahead, at least for the FY27, do you think, are you penciling any earnings downgrades?
I don't think there will be any earnings downgrade. I will be negatively surprised if there is a not massive earnings upgrade. In my view, from this quarter onwards, you will see substantial upgrade in the earnings for all the IT companies.
Okay, okay, got it. So what is the earnings growth that you're expecting from the sector going into FY27?
So as I said, revenue growth will be 5, 7% at industry level. Companies can do 8, 9, large caps can do 8, 9% growth, and mid cap 12, 13, and small cap can do 15, 16, and then you add the benefit of the currency. So as I said, it is very hard we don't have data of how the hedgings are and all. So very hard to give that call on one particular year, but let me put it this way, next 3 years, you will see 50 to 70% PAT growth from the current level for all the companies.
Okay, okay. Do you think that the street earlier, which believed that AI would create a fresh capex cycle for Indian IT, that narrative has changed from an AI opportunity to AI disruption? So do you see a thematic change from the next 3 years that you are projecting?
I don't think the space in which we operate, there could be a massive capex cycle in AI in India. If it is done, it will be counterproductive. It will unnecessarily burn cash. There is no play for us there. See, there are three layers of player, and people who are appreciating today, and they are saying that Indian companies have not done anything. I think they don't see the data. Last 20 years, the hardware companies have not done anything. Last 2, 3 years only, after waiting for 20 years, spending billions and billions of dollars in R&D, they have got a cycle after 20 years. These are all data. I am not saying it. You can go and check the data. Any of the hardware players, any of the product players, they have not done anything. 20 years they have suffered badly, and after 20 years consistent, persistent patience and investment, they have got one super cycle of hardware after 20 years, and they are doing phenomenally well. You can go and see what was the number for Nvidia itself from 2007 to 2022. You will find all the data. It is there. So I think the second layer is the software product, which definitely we should have. I think rather than comparing our companies with hardware companies and the chip companies across the globe, I think we should always try to, compare our companies more with the likes of the FANG companies. And I think we have done some bit of good work there, like because, we are not a capital driven economy. So we have our own platforms which are consumer driven, like the Urban Company or the Eternals or the Swiggy, where we have done phenomenal job. But at all, if we have a dream to achieve or we want to achieve something, we should focus and try to achieve something closer to FANGs and not to the hardware, because hardwares are very very long cycle, very not necessary when the rewards will come. We don't have that kind of cheap capital to do. But the third layer, which is also very important, is the services layer. Unfortunately, in that layer, what has happened is because we have almost penetrated very deeply into the developed markets, the growth has reduced. So we are the second best in the whole value chain. I won't compare ourselves with hardware. I think we are much better than the hardware players. But yeah, we are inferior than the software product or the platform players, broadly the FANG players. So we have a good runway on the application layer side for next 3-4 years, because all these AI companies which are now selling their products to enterprises and retail, they will need a lot of support. And Indian companies are very good in that. Will have consistent growth. We will not see hockey stick growth like the hardware players, nor we will see sharp dip in growth like the hardware players. That is the way I see the sector.
Okay, got it, got it. Then, Sandeep, what is the kind of re-rating cycle that you're seeing for IT stocks, given that you have envisaged quite an optimistic growth horizon in terms of profit levels? What is the kind of re-rating in terms of valuations you're expecting for large cap and mid cap IT names? And of course, in terms of stock returns as well.
So, re-rating very tough, because the narrative across the globe right now is that, we have missed the AI race and all that. So till people, see the application layer, which may take some time, I think, re-rating may not happen. So I don't know whether re-rating will happen this year or next year. And I can't build my case as a fund manager on re-rating, because re-rating is not in my hand. But I can tell you that from stock return, that I assume that even if the current multiples remain, we will make at least 50-70% in the stocks in next 3 years at index level.
Okay, got it, got it. Any risks to the best case scenario that you're assuming?
Risk very tough right now. I'm not seeing, because everything bad that can happen has already happened. It is in the numbers. So from here, what can go wrong? Very tough to call. Also, the biggest risk always on Indian IT sector was the localization risk. I think most of the companies have more than complied with that risk also. So I honestly don't see much risk from here. I feel very very positive from here on the sector. As I said, don't give any re-rating to the sector, but the pad growth you can't ignore, and pad growth will be very robust.
Okay, okay, got it, got it. All right, Sandeep, with that we have to let you go, but thank you so much for your time, and of course, looking forward to more such conversations.
Thank you.
All right, markets fairly